Hey everybody, welcome back to the channel. On today's video, we will talk about two fintech stocks that we often talk on this channel. The first one will be SOFI. So with a very good earnings reporting and decent future guidance, the stock is still barcoding between the range of 690 and 720. We will do a technical analysis on SOFI. I will give you an update on the current trade that I am in, and I will also give you another trade idea since the stock is at the $7 range. Next, we will look at Block, ticker symbol SQ or Square. Now, Square also reported earnings very recently, had a very good quarter, and also reported very good future guidance. So we will go over some major highlights from the financial earnings, as well as we'll do a technical analysis and give you another trade idea on Square on how I am playing it. So if you enjoyed today's video, make sure you give us a like so that the video can be pushed out to more people. And without further ado, let's dive in. Let's kick it off with SOFI. So far, year to date, the stock is down 30+%, and in a 52-week range, the stock was between $4.45 and $11.70. This has to do with a lot of short interest that has been being built on SOFI as well. As you can see right here, the short interest continues to be over 18% on SOFI. So we could see the shorts covering at some point in time, but as long as the short interest remains high on the stock, we will continue to see a lot of downward pressure on the stock. A lot of this also has to do with fear and greed index. We were in the category of fear a couple of weeks ago, and now we are coming back into neutral since the S&P 500 has actually gone above the 500 mark. From an earnings standpoint, they did beat the EPS, and they also beat the EPS from a gap standpoint. Overall, they had a very good earnings season. I continue to stress on the fact that as a fintech company, mid-teen to high-teen growth for the next 3 to 5 years, and this is exactly where you need to be focusing on if you are investing in this company from a long term. When we will talk about Square, I'll show you a similar trend where that company is also growing in low to mid-teens for the next couple 5 years. So whenever you're looking at growth companies, and especially in the fintech space, looking at earnings potential is very, very important. One of the most popular metrics that value investors look at is the PE ratio. Forward PE ratio for SOFI, it's 84, which is super expensive. So you are paying a lot of money for the earnings in the future, whereas the sector median is only 11. So you're paying over 600% premium on buying SOFI. Now, before I give you an update on the trade and we look at the couple trade ideas, here is the weekly chart for SOFI. You can currently see that the SOFI has had pretty good bump right around the earnings time frame and still pretty much on a downward trend. It did push up a little bit for the last week or so, but we do have a resistance at 720. Now, switching back on the daily, you see a little bit more clarity on the chart. You can see it has been pretty much bar coding in this range from between 694, this level over here, all the way hitting to this range, which is 718. So you can say 694 to 718 is where the stock has been trading for last 1, 2, 3, 4, 5, 6, 7. About 7 to 8 days it has been trading. It presents a very good opportunity because you can see that there is a decent volume shelf at this range, and seems like a lot of traders are getting in and doing a lot of trading at this range. So pretty much if you are going to be building on your position or you are going to start in your position, this could be a very good opportunity to kind of build in this range. If you are looking to build a lot of stocks in a short amount of time, looking at options and strategies like cash secured put is always a good option to try that. So for those who don't know what cash secured put, very simply put, you basically are going to buy 100 stocks, which will be one contract, and you will have to allocate that amount to buy 100 stocks. When you are putting that contract, you will get premium because you are blocking or you are locking that money for that defined amount of time. Before I show you my trade update, here's a couple trade ideas that you can take a look into it if you want to build positions or if you want to do trading with SOFI. I generally take a look at about 30 or 60 day time frame where I can get decent amount of premium on my investment. I'm not going to be looking at 6.5. I am still targeting the $7 range. The reason I am targeting $7 is because that has been a psychological level for the stock for many days and months as well now. And if you go back in time, you will notice that at these levels there is a very big volume shelf right around here and here, and this is where most of the buying and trading is happening. For now, unless the market changes drastically, $7 is the range that I'm currently looking to enter into SOFI. The first trade idea will be targeting June 14th, which is 33 days out, targeting $7 range, and we will get about 35 cents. So you're looking at about almost 5% gain in 1 month on your capital, which basically drops your cost basis to $6.65 cents per share. That's one option. The second option, if you want a little bit more premium, you can look at going about 60 days. So then you can try the July 19th. At $7, you will get 54 cents. Now here is the update from my last cash secured put that I'm currently in. I have a $7 put out for May 17th. So I'm recording on May 12th and this is going to be expiring 5 days out from now. Currently I am up about 65%, which is this. So in this contract I got about 43 cents and I did not roll this contract even once. So initially I got a pretty good premium. If I open today, which a month out, you would notice that I'm only getting 35 cents as opposed to 43 cents, which I opened a month before. Unless SOFI really goes down below, then I will be rolling this contract and then targeting a different strike price. Definitely follow me on X because I will post my update over there as well. Next up is another fintech stock called Block, ticker symbol SQ. Year to date, this stock is down about almost 8%. Currently, the stock is also trading somewhere in the middle of their 52-week range. The stock was down almost 38.85. So if you bought the stock around those price levels, you are up handsomely. Now, unlike SOFI, the short interest on Block is only 2.37. So this stock is definitely not the one that you will see any short squeeze. They reported their earnings on 5/2. They beat their EPS by 12 cents. They beat their GAAP EPS by 49 cents. And then they also beat their bottom line, the revenue, from 137.98. Overall, this company has been firing all cylinders. And you can see then the earnings history that this company has been doing very well, especially from a revenue standpoint. They have been consistently bringing over $4 billion a quarter, now closing to almost $6 billion in the most recent quarter as well. And the same can be said if you are looking at their earnings potential for the next couple years. If you remember, on SOFI side, we were growing in the mid to high teens. This company is going to be growing in the mid teens and lower teens as well for the next 2 years, and then it dips below 10% for the third year and then again picks back up into the mid-teen growth. So overall, you are seeing a pretty good, decent growth year over year. This is the most recent earnings report from Block. Growth at scale, strong year over year gross profit growth and a 22% year over year growth. So the company continuously is showing growth across their segment on both Cash App and Square business. They are also looking at improving a lot of profitability. So in quarter one, they had an operating loss of 6 million. Now they are in 12% margin, which is they're up to 250 million in the operating income. Great increment, great progress in the last 1 year by this company. The same can be said in the net income standpoint. They had a net income of 98 million. However, now look at the 472 million they are bringing in net. The focus is on the profitability. A lot of these growth companies in the last few years were focusing only on growth because the market was like that, the environment was like that. This is a tough environment, higher interest rates, it's not easy to borrow money. We are seeing a lot of layoffs, a lot of geopolitical tension across. Companies have to start showing that they can be profitable and not just have a future growth story intact. Even on the adjusted EBITDA, we can continue to see the stock has been climbing up. The company has been climbing up. Look at the adjusted operating income. Very nice 17% margin, 34% margin. Now this is also a very, very important slide if you are a Square investor. So back in 2017, you could see that most of the revenue was coming from using one product. So one user is using only one product. As the years are progressing by, you can see that the users are starting to use more and more Square products. So now you are seeing a bulk of the revenue, a bulk of the profit is actually coming from using 4+ products. This is what is called being in the Square ecosystem. All big companies, whether it is Apple, whether it's Tesla, whether it's Amazon, whether it's Microsoft, all these companies, software companies, hardware companies, it is very important that the company keeps the users in the same ecosystem. So you basically buy one product, you start using one product, then you augment it with another product from the same company, another service from the same company, and that keeps you in the same ecosystem, helps that company generate a lot more revenue from the user because then there is no more new customer acquisition cost. On May 8th, Barclays analyst Ramsey El-Assal sees Block potential future inclusion in the S&P 500 as increasingly likely and a potential catalyst. Citing the firm's positive GAAP net income in Q4 as an eligibility factor, El-Assal rates Block as overweight, Seeking Alpha's quant system rates the stock as hold. hold. So this is like being in the wait list. Some companies in S&P 500 do not perform. It is not uncommon that companies get replaced. Now, if you are an investor of Square, getting added into S&P 500 is a major deal, because when you are in S&P 500, you get exposure to a lot of ETFs across different categories. If Square gets added into S&P 500 down the road, you will see a pop in the stock. I am very bullish on the company, not because it's getting added into S&P 500, but the potential this company has to offer. Square most recently reported earnings. We saw the volume pop. This time around, the volume was pretty muted. It did not go up as much as the previous earnings. And that's one of the reasons that we did not see any major gap ups. We did see a lot of buying pressure going all the way from 68 all going to about 76, and then there has been a decline because as the volume starts to die down, the stock is kind of stabilizing and finding its route. 71.31 could be a good support line. You do have decent volume shelf, so this is a good volume shelf right here, all the way going from 71.26 to going about 73, and then the volume shelf really starts to pick up all the way to about 75. So anything between 70 and 75 is a good price range to start building your position out in Square. The stock is currently down below its 20-day and 50-day moving average. So for about a 1 week out, I'll be looking at about a range of 70. The delta is 35, so it is a little bit higher delta, but you are also going to get a good premium here. You can get about $100 on this one. So effectively your cost basis would be 69 if the stock gets assigned to you. Open interest is about 8,300. So there's a lot of open interest at this particular level. You can go out 2 weeks here, and at the 70 range, you will get about 163. So as you're seeing, even you're going 2 weeks out, it's not doubling, and the delta goes up from 35 to 38. And the open interest actually drops drastically to only about 82. There's not a lot of open interest at $70 for next week. The open interest is around 1400 at 66, where the delta is 16. So I really don't know if the stock would fall that much. I would be looking at 70 strike price for expiration 517. I will be posting this update on X as well, so make sure you follow me on X. So let me know in the comments, how did you find today's video? At what prices are you going to be adding SOFI and Square to your portfolio? I would love to know them. If you enjoyed today's video, make sure to give us a like, click on subscribe, and ring the bell notification. I will see you next time in Mr. Family, but don't forget to invest for tomorrow.